Before you begin any development, it's essential to understand the market. This involves analyzing data, rents, vacancies, unit mixes, and all of your upcoming projects. That's why conducting a thorough market study is critical. The market study is the second step in a series of 5 feasibility studies you must complete to ensure your development project has a strong foundation. If you're new here, welcome. I'm Ben, a real estate developer with 30 years of experience. I started flipping houses in 1998, learned every trade that I could, and eventually transitioned into ground-up development. These days, I'm building mid-rise projects, and at the time of this video's release, we're developing a 70-unit building. This video is part 2 in a 5-part series on how to run a full feasibility study. So if you want the full blueprint, make sure you check out the rest of the series. Let's jump into step 2 now, the market study. So in this particular project, we're trying to figure out if we're going to do condos or rentals, right?
Yeah, that was one of the first decisions.
Yeah. What is it that we're trying to figure out when it comes to making that decision, whether we're going to go condo or rentals? What are we looking at?
So yeah, one of the first steps is thinking about the actual real estate data that's out there. What are some data sources that we look at to kind of answer and come up with good decisions around key things around these projects that we do, right? So in the case of, let's say, determining whether we're doing rentals or a condo project, we'll start to look at the rental data. So rents, existing buildings, what does the housing stock look like? And there are a number of resources that we can go to, whether they're paid or free online when we're doing that kind of research to make that decision. And same thing with condos. Condos is a little bit different because the bulk of that data tends to sit in things like MLSs. But obviously, we have relationships with brokers that we can talk to them to gauge feedback. But we like to be data driven, right? To make decisions based on facts, not just hearsay or anecdotes. Right. So there's a lot of resources. So in this project, we know the market pretty well. We see what's happening in that area. We see other developers building building buildings there and existing buildings there. Majority of them are rentals, and a lot of the data that we were looking at there was reflecting that. And one of the things I'll show a little bit later is some of the data sources that we looked at for the condo side as well as we go through it. But we kind of knew, at least here, that it made sense that the data was showing us that rentals made sense. And I'll go through and show you some of that data.
And what makes a good condo market versus a good rental market? What makes us decide one way or the other?
So here, when we were looking at that data, when you look at the condo sales data, for example, like normally we think when we do our projects, we think, okay, if you go down the condo route, it needs to, from a financial perspective, make sense that it's going to end up making more money. It's more valuable. It's a market where people, with condo sales, the person that's buying that product, that condo, believes long-term. So is that a market where somebody is interested in buying something, owning something, living there? Like, are schools good? Let's say, if that's a factor in terms of the type of buyers are in that market. So here, when we're looking at the data, we were seeing that the condo sales per square foot, the number of sales that occur in that market was pretty low. So it wasn't making sense compared to other markets that we know that are not too far away and have higher home ownership. The value of the condo, the value per square foot was perhaps double, let's say, in those markets. And I'll show you some of the data that reflected that on the condo side. But you could see that it wasn't a market that was necessarily attracting homeowners, people that want to come in and buy condos.
Right.
And you could, we saw as we were doing the research, we'll show, other developers saw that too, right? You could see the projects that were being approved and were being built were primarily rentals. People weren't doing as many condos. And there was a reason for that, because the data was showing that the sales valuations weren't high enough or didn't necessarily make sense to do it.
So you talk about data a lot, and you're going to be talking about a lot of data in this thing. How important is it that the data is very accurate?
Yeah, so I think I always tell you this saying where if the data is bad and you're making decisions on bad data, or you're building pro formas, or you have data inputs and assumptions, if you have bad data going into these things, then it's just garbage in, garbage out. So it's really important that the data that we're looking at, it's coming from good sources, and that we're really digging into it and we really understand that the data is accurate.
And how do you know that they're good sources?
So, like we have access to things like CoStar, which is considered a reputable data source for commercial real estate data. And we'll walk through a couple of reports that we tend to look at. And we typically get that from brokers, right? There's lots of other data sources too that, Zillow obviously has some rental data that is generally available to anybody, but it's not perfect. There's MLS data, which is very accurate. That's a really good. So for condo sales, MLS is great. If you have access to it, it's great data source. Then everything in there is usually very high quality. So that's very reliable data. But you'll also see even like CoStar, which is considered a good reputable source. When I look at some of that data that's in there and I start to like pick it apart, and CoStar will tell you, hey, this building, the rent is this much. If you go to the website of that building and you start looking at the rents, you'll see there are discrepancies. So it's imperfect.
Maybe it's a little outdated, and
Could be
they haven't updated everything, right?
Right, or they haven't gone out and done enough research to pull that data or find out exactly what the rents are. They have their methodology as to how they're scraping that data and where they're getting it from and how they're sourcing it all. And there's lots of others. There's like, getting cap rates data, getting sales per square foot data, getting building sales data, dollar per unit, all these different metrics or data that we're out trying to get. There are different data sources that we can go to, but again, you have to know how to use them, right? And be able to vet them and know where they might be wrong or sometimes adjustments you need to make. So, but again, it's all important, whether that data is 100% accurate or not. It's telling you a message, at least at a high enough level that you can start to dig in and refine your research, which is what we always do, right? Especially as we're really moving forward with the project, we really dig in. Like we really start to do that research.
Okay, so let's dig into that.
Going back to that initial thinking of rentals versus condos, when we're doing, let's say, a rental analysis, one of the initial things that we start to think about is like the physical aspect of the real estate. Also applies to condos, the design. But that initial physical aspect of the real estate, we start to look at what are other buildings that are being built, what kind of amenities are in them. CoStar is helpful for stuff like that because I'll show you here. This is one of the reports that we produced. It's called a rent survey report, where you can pick an existing building and you can tell it to look at all the buildings that are within a certain radius around that building that has certain criteria, show us information about that, rental data, usually used for rental type analysis, rent comps and stuff, but it gets very detailed as to the type of data you can get from CoStar.
So what were we looking at just for a second there? What all those buildings? Are those buildings in the vicinity?
Yeah, so this was looking at buildings that were located around an existing comp. So you can establish, like, hey, take this address, this existing building. Mm-hmm. Here I picked a building that's...
Okay, so that blue dot is the subject property.
Subject property, yeah. And then around it, you can filter criteria like, hey, I'm looking for Class A, let's say 4 or 5 star, maybe 3 star, with CoStar's methodology. They have a methodology around how they qualify buildings. Show me stuff that's relatively new and comparable, right? So the criteria is important. We're doing a project that's new construction that will target, let's say, a higher end tenant. So we want to obviously look at buildings that meet that criteria and see what's in them and do that research around that physical aspect. So CoStar's got all kinds of stuff. So it's, there's a lot of buildings in this vicinity. And when I did this report, I wanted to see more data than less. So there are buildings in here that I would consider not comparable to the project that we're doing. But I just wanted to see the data so we could understand what does it look like. And so some of the information that tends to be in here, it's got pictures, rendering, it's got all the names, addresses, total units, it gives you vacancy. It's got lots and lots of data. You can really drill into it. You can see like what are some amenities in the building, like they call them site amenities in CoStar, but I call them like common area amenities, right? We're trying to figure out, hey, we're going to build a building. Do we need to do a gym? What's the market doing? How are we competitive against other buildings that are out there? Then they also give you things like unit amenities, like, hey, do we need to do laundry machines? What does the air conditioning setup look like? What kind of appliances do they have? What are the finishes? Right. And so there's information in CoStar that can give you that type of data. And again, this is also not perfect. Sometimes there's misinformation in here, but that's where you can start to really drill in. Right. As we do our research, we start to see a big picture view of what the market looks like, and then you can drill further and not necessarily rely on the CoStar data exactly. You can go to this building's website. You can look up pictures, right? We do that. We kind of look at things. You can look at their asking rents. Are they offering concessions? So that's all part of that research. But there's a lot. This is a good starting point, I feel like. And anybody who's doing this, whether it's nationally or regionally, or in our case, if you're really honing in on a particular area on a specific project, CoStar is a good starting point for projects like this. Commercial real estate, multifamily, relatively large sizes. It's got a lot of good data. And so that's kind of like the physical aspect, right? We also start looking at pictures. What do the facades look like? Are they high rises? What do these mid rises look like? Are they, making the buildings look a certain way, like super, very high end, let's say. And, that we kind of take that information as we start to think about what the marketplace looks like. So we're giving architects and engineers the right direction when we're getting to that schematic phase, right? What are we building? CoStar has data like unit mixes. Like, is it a building with all studios? Is it a building that has one bedrooms, 2 bedrooms, 3 bedrooms? These reports and data that's in CoStar, you can get high level overviews of the whole market or really drill down into existing buildings. It gives you an idea of, unit types. For example, there's a report that CoStar has, like it's called a sub-market report, that kind of gives you really big picture views of what's happening in the overall market. Like one of them being, here's one that's like vacancy by bedroom, like our studios, 1s, 2s, 3s performing differently from each other. Again, the data is imperfect. There can be blips that affect this data. A new building gets delivered, or if the underlying data isn't perfect, these aggregate level data isn't always 100% reliable, but it can be used for direction, right? It's like, is the market going up or down? Usually that level of data is reliable, directional information.
Explain that some more, the market going up or down. What do you mean by that?
Here's a chart, for example, like looking at vacancy by bedroom in this submarket.
I see. So you're understanding how this building is performing year over year.
Or the market. So this is a market level data point. But like you can see, for example, during COVID, like all buildings nationally, vacancy started to creep up. And did it creep up differently from studio versus a 3-bedroom? This data that CoStar has can give you that directional type information. Whether or not it's exactly 9%, not necessarily the case, because sometimes the data can get skewed based on if the underlying data is imperfect, but it's giving you directional information at least. So it's from that perspective, it's helpful.
Right.
And it also gives you data like, these like unit mixes. Is there being a lot of market rent per unit by bedroom at an aggregate market level? Yeah. So like, hey, studios in the aggregate rent for about this much currently versus 1 bedroom versus 2 bedrooms, 3 bedrooms. So it's giving you high level data points to just give you framework around that market.
What about the amount of 1, 2, and 3 bedrooms in the marketplace?
It isn't perfect. It depends on how many buildings are in their database and if there's enough buildings in there to kind of create good aggregate views. But like here, for example, in this rent survey report, there is high level information of like, hey, in this data set for this particular report for this subject property and all these comparables, let's say around it, what are some high level stats like total number of units, low, medium, average, high total number of units in a building, let's say, and then how many are studios or how many 1-bedroom units? Gives you some high level averages. What's the average year built? How many stories is it? Vacancy data. So it is aggregating some things for you. And so it's still, I think, part of when we do this, it's a study, right? So we're just trying to get better, smarter on the market. It's just giving us information, data points that we can use.
And we also want to know what everyone else is building and to see if there's any gaps in the marketplace so that, we can build something that's missing.
Like if there's too many studios being built, is that going to cause an issue perhaps? Right. There's data in here that shows supply side of things as well. But right now, what I'm showing on the screen, it is giving very building specific data. Like, hey, in this building, these are the number of studios, the 1 bedrooms, 3 bedrooms, 2 bedrooms, how much the rent is it vacant or not? Again, it's not perfect, but it's giving you some directional information on a specific building. And then what we tend to do is let's say we find a building that looks like it's probably comparable to what we want to build. We can then drill into those, let's say 3, 4, or 5 buildings and understand it a bit better, how they're performing. In these CoStar reports, you have like information around the rental size. I think of that as like the revenue, right? So how much rent per square foot could we potentially be charging? How much monthly rent per type of unit can we charge, right? So how much for a studio versus a 1 bedroom, 2 bedroom? It's giving us that revenue information. It's also giving us information like around vacancy, average vacancy in the market. So that's kind of getting into the demand side of things. Like here in this rent survey report, you can start to see things like the averages for this comp set. Studios, 1s, 2s. What is the vacancy rate by unit type? Here's some aggregate total unit counts that are in this comparable set. When we were looking at this data, right, we kind of know in this market tend not to see too many 3 bedrooms. And we kind of know somewhat anecdotally it's because the type of tenant that rents a 3 bedroom in this market, probably roommates. It's not necessarily families that may care about school districts and things like that. So that's all part of that market research and study, right, that we're doing. There's other information on the revenue side, like, hey, are people giving concessions? So are people giving 1 month free, 2 month free, 3 month free? During COVID, you heard all kinds of crazy stories like getting 3 month free, 4 months free at that time because people just needed to fill buildings. People had left. And the market data, you can, CoStar through their process and the methodology tries to aggregate that type of data. But we also do it by just, going to a specific website for a building. It's important, right? Because as much as sometimes like these data points, these are like asking rents, there could be concessions being provided where it's actually technically less in that market because maybe the market's a little softer.
So how does this help us figure out the unit mix in the building?
So when we look at this, some things that we'll look at is, hey, is a studio getting, let's say, more rent per square foot compared to, let's say, a 1 bedroom or a 2 bedroom? Now, studios cost a little more to build because they have more kitchens and bathrooms relative to, living in bedroom space. But it may be worth building those because we're able to get more rent out of it. And a lot of the economics in development are driven by those kind of measures because when we build buildings, how much it costs to build the building is driven partly by, how much square footage do we have? How many units do we have? How many kitchens and bathrooms and those type of things? So we're trying to optimize that revenue versus expenses. And then secondary to that, it's also helping us give some direction out there. Like, like we were saying before, too many studios, too many 1 bedrooms, perhaps relative to what we're seeing in the market. Is the leasing up of that going well or not? Studios 1s versus 2 or certain unit types sitting around longer. There's data in here, high level data that, this is all building by building and, giving you rentals by the unit types in these buildings. Then there's like aggregate data in here too, like at least in this particular report, shows you how much is subject property, are the rent comparables over time for studios specifically, how have they grown over time? There's even vacancy data across these unit types too. So it just helps us kind of frame that type of information when we're building pro formas, right?
Sure. And it helps you understand what exactly, what your unit mix is going to be, what's missing in the marketplace and try to fill in that gap, right? And also create the amenities that those types of people are looking for in a building.
And the other thing that's when you're doing these analyses, obviously there's like another element to it. It's not just revenue you're looking at, so like rent measures and things like that, or let's say vacancy is just starting to turn into more supply demand. It's that aspect around supply as well. So are there a lot of projects coming online? What data is out there around the supply side of the equation? Is there a lot of rental projects, and what's in those rental projects? Where are they? Where are they? And what do they look like? So CoStar has data around that as well. There's like a section in this report, they call it the construction survey, which shows you in that area, what do they see and what is the state of these projects? So, here, for example, they're giving exact unit measures based on their database. Here's how much was delivered in their database in the last 2 years. Here's their projected deliveries in the next 2 years. Here's things that are proposed that perhaps may or may not ever break ground. And you can actually, they have projections around when they think those types of things might be delivered.
What about unit mix in those projected properties?
They do give you unit counts, and they do try to give you data points around when they think those projects will be finished. I don't think they get into that level of detail. On the delivery side, you can see at least the breakdowns of the units that have been delivered and where they were delivered.
That's delivered, but what about
that's on the
future
deliver
pipeline?
side? Yeah, I don't think they get to that level. And I suspect it's partly because the data may not be available or out there, or maybe sitting in like a news publication as opposed to a publicly accessible
document.
Let's say construction document or site plan.
Site plans.
But every market is different, right? In our market, we can get things like site plan approvals. There is access, so we can drill in. This is a good starting point because it's giving you addresses.
Right.
Where it's a little imperfect is, construction start and end dates. Like CoStar does their best based on perhaps public available information, but as we know, just because a project is proposed or approved, like many of them may not ever break ground. So the data isn't perfect, but it's definitely useful, right? Because we can then, when we know the market really well, we can research each of these. We can talk to the brokers, talk to people, follow what's happening. If we're local, we can drive by the site and we can kind of dig further to understand what's going on. Is there anything in these buildings that will become a potential competition for us that'll be an issue or not? But that's the supply side. And so at least CoStar is pretty decent at having that type of information. It's just you kind of have to know, you can't rely on it perfectly. It's a great starting point, though. It's very useful from that perspective.
Yep. I mean, we do our own, besides CoStar, we dig into buildings. We always, keep our ear to the ground, talk to developers in the area, talk to brokers in the area. We get to know the buildings.
Yeah, and right, as we're doing research on these buildings, we can, as we're digging further, we're starting to understand, these new buildings that are coming up, are they doing utility reimbursements with tenants or not? Which is like a common thing we're saying now, where tenants are being billed for their sewer and water usage. Since it's new construction, these developers, you can implement those type of programs. It's not in CoStar, but it's part of that market research, right? Like this is a starting point where you're getting a bird's eye view of what's happening in a particular market where we're doing our market study. And then we can kind of drill down and research further on that type of thing. Outside of CoStar, there are other data sets that we use. Because we have access to the MLS, we can drill in, download data from the MLS, like very, very detailed, like all the data, which is very high quality. And in this case, the MLS, we're looking at rental data, and then went through the process of sorting things by building, looking at it over time, looking at it by unit type, and looking at how many in each of these buildings and what was the average rent of that type of unit in that building at that point in time.
So how does one get access to this?
So in our case, we have a license, so we happen to be part of the MLS. We have a license with a broker, and through that process, we're able to get access to the MLS, so we can do our own analysis, which is nice. But if you're not able to, usually the easiest method is working with brokers, right? And so we work with brokers. in this case, like what's the incentive for a broker? We're doing a new building. There are brokers out there that specialize in rentals, right? And they want to get, let's say, an exclusive listing. They're willing to help you on that type of data analysis. You can ask them to work with them to get that data extracted from the MLS and do that kind of analysis. Because I would think a good broker, let's say, who specializes in rentals, they should be doing this. Right? They should be educated on the market and helping developers do this type of work, do this type of analysis. And the more I feel like a broker is doing, if a broker did this for us and like delivered this to us, like hands off, like, here you go, here's all the data, like that would be amazing.
Yeah.
But not everybody does that, and it can be time consuming. And one of the benefits of us doing this ourselves is it's part of the education process, part of the learning process of getting really educated on a site as we move forward. We need to know these things kind of by heart, inside out, because we're the ones who had, capital at stake, investor capital at stake. So it's part of our analysis. But this data is very high quality, and because it's through broker participation, the brokers that put this data, they're required to enter this data, and they're required to make sure it's accurate and reflects actual results. And then obviously there are also other data sets like Zillow, right? Anybody can go to Zillow and just start to see what are the asking rents. We recently met a company, right, that is scraping the internet and scraping Zillow for data and kind of storing that data to be able to analyze it over time. And even those are asking rents, but they're working on building out a database to create a subscription model around it for developers, acquisition, investors, right, that can do that type of data. So there's definitely lots of providers out there. Some are free, some are paid. It just depends on, how to get it and who you perhaps need to talk to get access to that type of stuff. And then outside of that, there's lots of like high level free research. So like on this project, one of the things that we did is, because our project is in the New York City metro market, one of the things that's important to us is understanding what's happening in New York City and what's happening in Brooklyn. There are lots of free reports. This is one of them from Douglas Elliman that does a good one. Usually I feel like most markets that I've looked at, this happens to be New York City, but most markets that I've looked at, usually you can find public research out there that's readily available that gives you this kind of data. Now, this report is very detailed. It may not be to this level of detail, but you can usually find something, at least to a point where if you're trying to do a rental analysis, just how much is a studio, how much is a 1-bedroom, 2-bedroom, usually you can find reports like that in most markets through brokers. But this one's really good where they do all very, very thorough, and they publish it monthly. I mean, you can get all kinds of pricing. They do it by Manhattan, Queens, Brooklyn. Tends to focus on, let's say, newer buildings, but this is a good one. One of the best ones that I've ever seen in our area. And then we just use this to kind of get a gauge of how our market is relative to New York City and potentially competing markets when a tenant's trying to figure out a place to live, right?
Because we're not just looking at the city that we're in right now, which is Jersey City. We're looking at the entire region as a whole.
Yeah, because a tenant who may rent from us may have an option to, let's say, rent a building in Brooklyn.
Yep.
Or maybe they're just going to live in New York City, let's say.
Or the Bronx.
Or they may go to Harrison, New Jersey, or they may go into the suburbs of New Jersey. Having an overall view of that market and understanding your competitive set, it's part of that study, right? Part of that process. Lots of data out there that's available. And the good thing is, data can be free as well. So these are a couple that we tend to use.
We're gonna have a little data ticker on this video. It's like how many times do we say the word data, right? Because how important it is.
Yeah. Another thing that's important when we're going through that process, I mentioned it briefly in the beginning, is like sales data, right? So like so far I've only talked about like rents, maybe concessions, amenity fees, utility reimbursements, revenue side of things, vacancy, supply, demand. When we do our projects, the other thing that's also important is, okay, we're building something. What is it worth at the end, right? That's obviously applicable in condo sales, like what is the condo worth? But in the case of a rental building, what is that whole building worth when it's done? And there's obviously different methodologies around how you value buildings, commercial real estate. And there are also data sets around that too. I'll show you like a couple that we've used on this project. CoStar has data around building sales. I find it to be like okay. There is information around it. They have their own database, but it's it just depends. It's like one of the starting points that you can go to. On this project, I went through a couple of different ones. The one I'm showing here, one of the methodologies, as we know, is a cap rate approach to valuing a building, right? So cap rate's one of the toughest ones to get because not everybody discloses it out there, and there are different databases that are better at it than others.
Cap rate meaning like what the cap rate is on each building?
Yeah, in a transactional database. So like there are a couple of transactional databases. So CoStar has a transactional database that says, hey, here's a building that's sold. When did it sell? How many units does it have? Who is the buyer and seller? If they can get NOI, right, net operating income information, they can try to figure out what is that cap rate. But it's really tough getting NOI because most people are not disclosing that, right? So if it's a broker deal, maybe there's a offering memo out there that might have an NOI number in it and a way to figure out a cap rate. But cap rate's like a little bit of an imperfect data point because it's determined by that numerator, that NOI figure. It can be manipulated because some people say, oh, is that an in-place NOI or is that a projected NOI where you assumed the rents are going to go up or something because you're going to, redo the building, get old tenants out, get new rents in, a pro forma NOI. So people game it a little bit. So the cap rate it's a much harder number to get very accurately. And the way we tend to do it, it's like you have to talk to brokers. You have to kind of like see what building sales have occurred and ask around like, okay, what was the cap rate on that building? Maybe sometimes you can talk to the broker directly who actually handled that transaction. That requires a little bit more legwork. There's also databases. We don't have access to them, but there's one that's called Real Capital Analytics that I've used in the past that has transactional data that's good to as small as $5 million. It's considered one of the better ones. And you can actually go to that website if you have a subscription and get data around it. But if you can't, if you don't have the subscription like we don't, you can get it through a broker and download transactional data to value things. CBRE, you can also get like high level data too. So CBRE does a what they call their cap rate survey. And it's a decent one, at least to get a high level view of what's happening. It tends to be ranges, but like here's their report from the first half of 2024. So it's just one data point where you can, in our case, we're looking at northern New Jersey, which is a big market, right? That encompasses a lot of towns that are not necessarily comparable to where we might be operating, but they give a range to try to give you an idea of like perhaps directional what's happening. But it gets a range, and these are Class A stabilized, may not be directly comparable. So CBRE, big company, these are primarily like Class A institutional level buildings. But if you're doing a project that's similar to this, 100 units, new construction, Class A in a good market, like this can be a good gauge. And all this work that we're doing almost feels like we're doing appraisal, right? In a way, appraisers do this, but as a developer who's investor, we have to do this analysis too because it's our project. We're doing it.
Yeah, and you have to make a case to the bank and to the investors how you're going to exit the properties.
Yeah. So there's cap rate information. Then there's also other metrics like dollar per unit, dollar per square foot. Those are much easier to get because you can always, at least in our area, you can get, a selling price for a property. That's pretty publicly available through deeds. And almost anybody can get that. CoStar, First American Title Insurance Company. There's data around sales prices everywhere. And usually you can typically figure out how many units is in that building. For us, when we're doing our project, we actually have good access to things like deed information. So like on this project, we went through a process of digging through actual deed transfers and figure out what were buildings similar to our project over time. What do they sell for? We know how many units are in them because we're able to figure stuff like that out. You can pull up the addresses. You can pull up how many units are in the building, what was the sales price, and then you can get to a dollar per unit measure, and you can kind of follow it over time. And this is very relevant because it's directly in our market. It's very helpful in it, but again, you still got to drill down, right? Because like in this data set, you can see it's all over the place. Like here's a building that sold for $700,000 per unit, and the lowest one sold for $310,000 per unit. And it's like, why? You got to drill down and understand why that happened. It's a big range. I do know the minimum one. I think it had some issues with it.
Yeah.
I think it required some further renovations. So we'll, that type of data we can dig up and do like projections and try to understand what happened over time, dollar per unit, and get to an idea of what this building might be worth when it's complete in our project. And this is an easier data point to get. The other thing is on the condo side, I mentioned it in the beginning, I'll show it here. One of the things that we tend to do is when we're doing our condo project is like really deep dive into. Here's one that looks at like one specific submarket that's defined in the MLS, the Jersey City downtown market. And I can look at studios, how many units sold, or studios not going, or one bedrooms.
This is the MLS.
This is the MLS data broken up. And it shows me, hey, one bedrooms in downtown Jersey City, how many sold in the second quarter, first quarter? What was the average price? Did it sell at a premium or discount to listing price? Dollar per square foot, days on market. How many was the average square feet of those units? Gives you a lot of data points, and you can chart this out over time. And this is a long one, goes all the way back in time. Or I can go really far back in time. Lots of this is really good for when we're doing our condo projects. It gives us really good data, and you can drill down into it because these are averages, right? And when we're doing projects, we're doing new construction. We're trying to see hey, can our new construction get something better, obviously, than the average? It should be. You can drill down and see specific buildings and what they sold for. When we're doing market level analysis, where we're trying to say in our area, in the MLS, in this particular MLS, there are predefined markets like downtown Jersey City or Hoboken nearby. There's other areas in the MLS and data and the way they've categorized their markets. I can follow hey, what's happened in nearby Hoboken over time, average price per square foot, or what's happened to downtown Jersey City over time. And these are just averages. So you look at what's happened to Hoboken, downtown Jersey City. Just keeps going up. But you can follow that data point and really drill down into the data. Here's an interesting, right, you ask that question hey, should we do condos on this project? This project is located in Journal Square, the one that we're working on. You can see, it's half the price of a better market like downtown Jersey City. But you can see what the price per square foot is, and you can drill down into it as well.
You could almost predict where it's going to go.
Yeah, it's going up, but it hasn't necessarily reached a point that perhaps it makes sense.
But it was always right about half of what the downtown area was.
Yeah, and it's continued to improve. Other questions we start to think about is, okay, well, that's just a dollar per square foot metric. Is there demand for them? Who wants to live there that's paying that much? And when you start to look at other numbers, for example, if you just look at purely how many sales are happening, here's Journal Square area. It's a reasonable number in terms of just pure number of transactions, number of sales occurring.
Those are condo sales?
Yeah, here's 2023, for example, has about 166 sales. If we were doing a 70-unit building, we're half of the number of sales right there that occurred in that market.
So compared to downtown, it's only a third.
Yeah, it's a third. It's a smaller market.
That right there tells you that it's not a strong condo market.
Yeah, it's not. You would worry about that absorption, right? You hit the market with, let's say, a big building. If you're a big building that's doing 500 units, 300 units, it could take you 3 years to sell. You have to really reach out to sell that building, right? that's actually happening to a building in downtown Jersey City. It's taken them 4 years. It's because it's got 800 units. And that market only does so many sales per year overall on the resale side. So it's just over data. There's lots of data out there, right? There's other metrics like days on market, right? All real estate agents look at stuff like that, right? Because days on market tells you, hey, if stuff's selling in 30 days, that's a seller's market. That's good. That's really good. I feel like one of the interesting things that's happening right now, like this is just the number of sales happening by market. It's kind of fallen off a cliff. There's so many few listings right now. The agents are all having to work really hard to get their listings because there's not many of them going around. And the sales prices for all of these the average sales price in these markets have gone up significantly over time.
Well, we predicted that, right? There was a shortage of supply because of the whole pandemic that happened.
Yeah.
That messed up construction.
And people have been, if you're somebody who bought recently, you're sitting on a really low mortgage rate, you're not necessarily going to resell. And those are like trends that we're seeing everywhere nationally. We're seeing it in our data here too. But at the end of the day, like when, for us, when we were doing this analysis, the purpose of all of this was to just get a really good understanding around what's happening with the real estate market, condos, rentals, and being very educated around it with very reliable data. And then making sure our decision-making around that, whether it's in our, the schematics, the type of units we're building and what the building is going to look like with the architect and the engineers, what we're going to put in it, and our pro forma, and we're coming up with the assumptions around the rents and everything, lease-up periods and all that. It's all based on this analysis that we do, right?
Right. And then you can go in confidently when you're pitching the project to the banks and to the investors, and you're putting all of this information into the business plan or the investment deck.
Yeah. Kind of taking a step back, what I would mention, things that we tend to do, up until now, I haven't really talked much about like economic demographic type stuff, right? But we do look at that, or at least try to understand, what's driving the market. Because when you're looking at rents, when you're looking at other existing buildings and how things are comparing, what things are selling for, you also want to understand like what's driving that. Like, why is the rent there? Is there something happening? Like, why are rents going up? And that's usually driven by things that are like more economic demographic type of factors, right? Like, oh, is population going up? Or, hey, is there like a lot of job growth happening that's perhaps driving that market? And then also when we're trying to figure out, you ask that question about, unit mixes, like what should we build? Some of that's also dependent on things like the demographics, right? Like who lives in a particular area. So the good thing about that, there's lots of free data sources around it. One of the best ones that we tend to use is Census. There's also paid subscriptions, right? So like you can look at all kinds of really useful stuff on the census. One of the more important ones is looking at like age groups, because if you're doing a rental project, you want to know, hey, how many people are kind of in that renter demographic of, let's say, like early 20s up to, say, late 30s, early 40s. Well, some of that's shifting, as we know. And the Census Bureau is really great at giving you city level data, giving you state level data, and national data. You can compare markets against. You can look at these age group data and compare it against the other markets and try to understand, how many potential renters live in your market and what do they look like and what percentage of the overall population is there. I think that's important, and you can even track it over time. There's like all kinds of data. You can go back over many, many years on the census website at least and download data like that to look at projections or look at historical data at least and see what that trajectory's looked like. Other things we've tended to look at are like things like employment data. I'd say that one of the key things that we look at on that is income information, because, when we're doing these comparable analyses, we're trying to figure out, how much to charge for a studio or a 1-bedroom or a 2-bedroom. You kind of also need to understand that if you're going to charge a certain rent, what percentage of the existing population could potentially afford that based on, traditional rules of thumb around income relative to rent. You can look at census data and see how many people live in certain income profiles, how many households. So there's data around in the census data where they stratified income levels and they tell you how many households are in the data. And so you can kind of figure out, okay, X percentage of households in this particular market can afford my 1-bedroom or 2-bedroom or studios. And it's good to know that data just to understand how affordable your rent is relative to the income in that market. It's also good to see what the income looks like in a market relative to the state and nationally, because usually when we're doing new projects, you're probably it's new construction, right? You're going to charge higher rents because you have to, because of the cost of construction. You need to understand that you're in a good market that can afford that, or you might see that a particular market is on the higher end of the spectrum relative to other markets. Unfortunately, all of that is free and available online. And then other things that we've done, right, or look at, we're just talking about like crime statistics. There's definitely lots of good websites. This website here, actually, it's called City Data. I'm sure other people have like Google search this. They have like heat maps. Everybody loves a good heat map, but they have information around some of that census data put on a map. Census Bureau also does this. City Data can provide you crime statistic data by year even as compared to other markets. So like they even tell you, for example, like, oh, here's murders in 2022 and there's 12 of them specifically. And compared to this value is actually smaller than the state average. So it's comparing against the state averages. So like a double up arrow means that it's way high in robberies compared to the state average. And that was in 2020. But if you look at this market, everything's green arrow down, which means relative to the state average, it's better. Mm-hmm. And you can look at it and it shows you every time. And this website's good because you can do it like nationally. They have this data across the board. I haven't looked at any really small markets, but the typical ones that we operate in, you can fit, and this is all free. You can get that data and just do really quick analysis of a market around crime.
You can determine what kind of doors you have to put in your building.
Careful what you say. Right. Actually, so like realtor.com, it's like a little off topic, but like realtor.com used to have crime data with maps and heat maps and stuff. I think they took it off 2 years ago.
Trulia used to have that.
So a lot of the states, New Jersey is one of them, have passed rules around what you can and cannot consider around crime when leasing to a tenant. And so, because they're trying to make sure that people who are perhaps get stuck in and may have a criminal record but are perfectly fine renters, they're getting held back. So they're trying to like remove some of that decision making out of it to try to perhaps give them a fair chance. So a lot of like Realtor took off all their data. Random off topic.
Right.
So yeah, I feel like the only other thing worth mentioning is kind of like last one. There's also information around like housing statistics. And the reason why it's important is because one of the things that they measure in the census data, for example, are things like average household values, how big is household sizes, how many people tend to be in a household. They also give you like high level information around like the type of housing stock that exists in a city or state. So you can even see like, 5 to 9 units, what percentage of the housing stock sits in there? How many of them are big buildings that are over 20 units? They even give you like age data. So it's just good information to know. In this particular city, when you start to look at some of the data, like the housing stock's really old. There's a big percentage of the housing stock that's old. But there's information around all that. So like, here built 1939 or earlier, 30% of the housing stock is that old. So that's pretty old. And that's quite high percentage. But that could mean like there's opportunity to build more there. There's housing stock that's getting obsolete. I just feel like that type of information just becomes part of our overall market study. And then of course, if we're looking to branch out, right, and do enter new markets, this is usually like one of the first steps. Start to understand the high level economic demographic information around a particular market. There are free resources, and then there are also paid resources that you can do lots of filtering and data searches. And then the last point, since we talked about so much data on this thing, it's a little bit, not necessarily something that you necessarily have to do with this like market study phase, but it's something to just generally be aware of are like capital markets type data that we talk about, that we tend to follow. And in real estate, what does that tend to be? It's things like cost of financing, right? One of my favorite websites for that is Fred. The St. Louis Federal Reserve has a website that has lots of charting capability, and you can look up, things like rates over time. And so I'll show it real quick. It's the one that we've looked at. It's one that I've done follow. It's like the one around rates, where you can look at what's happened to the 5-year Treasury, 10-year Treasury, Fed funds rate, prime rate, over a very long history, and all the data cleanup's been done. And there's housing permits, housing starts. These are a little bit more national, but on the capital market side, it's good to at least know rates, because that's a big one. And there are even free data sources around projected rates. So when we build our pro formas, we're trying to understand what's going to happen to rates in the future. I used to get this data from Bloomberg, but that costs a fortune. But there are some public data sets that I've looked at that can be useful around projected rates around. Things like SOFR and prime rate, you can get projections and use that in the pro forma. So there are lots of data sets out there. There's even lots of research out there where you can look at capital markets. Like Newmark does a capital markets report that's free, and it's like 50, 60 pages for anybody who's looking to get educated on it. There's lots of free research out there for this type of information that comes up later when we get into that pro forma phase.
So how does that help you besides the pro forma? Like, does it help you to think about your bank financing, where that's coming from,
so
what people, what investors are expecting?
So usually,
returns?
we tend to talk to brokers around getting information like that, but these are kind of more national trends, and you'll see like national trends you do tend to see when we're reflecting on very localized conversations with brokers. They're very much in tune, because the projects that we're doing, they're large enough that some of those national trends are impacting local dynamics, right? It's on the capital market side. So like, for example, if you look at the capital markets report from Newmark right now for 2024, you'll see certain national trends that they tend to mention. We hear the same thing from the broker, like who's lending, where are they lending? So like big projects, the really big private equity shops and developers that do the several hundreds of millions of dollars of projects, the financing market for that has shrunk. It's been harder for them. And some of the data in here was saying that, hey, if you're doing a $25 million project, that's where some of the capital has gone. Now it's still less. There's less capital available for projects like that relative to the past. But as a share of the overall debt capital markets, it's grown, because they're, $25 million projects smaller. There are perhaps more financing sources for doing projects like that. So it's good to know that, just to have a high level understanding, because these projects that we do, they're expensive and they need tons of capital, and you can't do them without those capital providers. And having a good outlook on that and understanding that, I think, is important, because you need to know whether or not, investing that time and energy doing all this research, whether it's a financeable deal. And obviously it comes up when we do our pro formas, but kind of having that context and understanding in the back of your mind as we're doing these things kind of just gives you a better understanding, right? Because when we're doing that market study and doing all that site analysis in the early phases, we also need to understand that there's a certain land value in place, and those type of things tend to be impacted more by capital markets type things. Cap rate is affected by capital markets very directly. So I think it's important to just constantly be following the stuff. And there's lots of good research out there, which is a good thing. And a lot of it's free.
Right. And
there's obviously paid ones too. So just like a little, extra thing that should be something that is upfront when you're doing these market studies, or at least things that you should be following.
By taking the time to do a proper market study, you're setting yourself up to build a project that the area actually needs and that the market can support. Now it's time to move on to step 3, the schematic design. In that video, we'll show you how to design the building based on the site analysis and the market study to ensure that the building is a success. Just click right here on the screen to keep watching. And if you found this helpful, don't forget to like the video, subscribe to the channel, and turn on notifications so you don't miss the rest of the series. I'll see you on the next one.